This week on Wu Says, we look into the second part of the mini-series on the Asian financial crisis of the late 1990s. The second episode explores how Malaysia navigated the crisis, the costs and benefits of its bold choices, and the lasting effects on the economy. Here's a segment from a conversation with Professor Emeritus Datuk Dr. Thye.
It is important to note that in this time, there was a lot of chaos outside Malaysia. And this chaos, in turn, undermined investors' confidence. And basically, they say, hold on, I'm not going to expand operation. In fact, I'm going to scale back and see what happens. Now, in the case of Malaysia, the banks basically stopped working because the banks were bankrupt. So they were not lending out money. So there was great difficulties. What usually happens in a democracy when an economic disaster happens, the usual procedure, the usual ritual that appears is whoever was in charge take responsibility for it. He leaves office and somebody takes over. That somebody may do exactly the same thing, but confidence has been revived. And when confidence is revived, business goes back to usual. You could say in the case of Thailand, right after the exchange rate debacle in July 1997, Prime Minister Chavalit was replaced by Chungpa within 4 months. In the case of Korea, when the exchange rate plummeted in November 1997, in the presidential election that was held a month later, the opposition won for the first time. Kim Dae-jung, the perpetual presidential candidate, he has ran 3 times before and he's lost each time. He won. Basically, economic crisis delegitimized the incumbent, and there is a change in government, and that business goes back to usual. Now, this happened in Thailand after the middle of 1997, in Korea at the end of 1997, and in the case of Indonesia, when the rupiah had gone from 2,500 to 10,000, Suharto was re-elected to be president for the 7th term. So there was immediate riots in the streets of Jakarta because the elections were seen as unfair. And what happened to the rupiah? The rupiah went from 10,000 rupiah to US dollar to 15,000 rupiah dollars. So Mahathir could see that the economic crisis is going to give rise to lots of economic unhappiness and hence potential political instability. And he realized that if people were to start running out of the ringgit even more, both the stock market in Malaysia will crash as well as the ringgit, because people will be withdrawing money from the stock market and sending it out of the country. When you withdraw money from the stock market crash. When you send it out the money, the ringgit crash. So to prevent this crash, Mahathir imposed the capital controls on September 1st, 1998. And then, after imposing those controls, he went about restructuring and reorganizing the banks in order for them to start lending money normally again to revive the economy.
Catch the full conversation on AWANI International and across our social media platforms.
So when they saw the Thye